Hi there, accounting firm partners. Jay Gabrani here. Thanks very much for joining me. Listen, today's video is a little bit different. This is not based on a question. This is more based on what I've been observing lately with accounting firm partners. I've been asking the question, what metrics do you help your clients measure? And the standard answers come back, which are based on financial statements, revenue, expenses, cost of goods sold. We look at their taxes, deferred taxes. That's all great. Okay, that's fine. It's necessary. But when we talk about, right now we're in a time of great economic uncertainty, and there's a lot of entrepreneurial clients who are looking at their accounting firm partners to be the advisor of choice. There are a couple of other metrics which first I'm going to explain to you, and then I'll ask if you are helping your clients look at this. So this, while you can, of course, apply it to your own firm or the business model of your own firm, this typical video, today's video is definitely meant for your clients to see if you're helping them measure these two key metrics. And I'm also going to seed them with a couple of personal examples, one accounting related, one non-accounting related. The first metric, outside of all the financial statement data, is the cost of acquisition of a customer into your business or your client's business. For the purpose of the video, I'm just going to stick with your clients. So the cost of acquisition, there has to be a number attached with, and the clients need to know how much does it actually cost them to attract a customer into their fold. Now, what is a customer? A customer who is someone who gives you money, as opposed to someone who's sitting on your database, who ultimately may give you money, but for now, they're someone who gives you money and you expect them to continue to give you money. So the cost of acquisition is one key metric. Now, the example I'm going to use, first I'm going to use the non-accounting model one. One of my businesses which I own, it's a franchised cafe. And one of the programs I started about 2 or 3 years ago was the birthday club. Okay, something simple. And the premise is very easy. In exchange for your name and email address, you just sign up for the birthday club, and the week before your birthday, I'm going to email you a coupon, and that coupon, you print it off, you bring in your driver's license or a piece of ID into my cafe, and you're going to get a free piece of cake. Now, the cost of acquisition, the slice of cake cost me $1.85. That was my cost. Even though we sold them and we sell them for almost $5, the cost is $1.85. So my cost of acquisition of getting that customer and that prospect, getting that information from them, their name and email address, basically they opt in, was $1.85. Now, the second metric is very, very important. It's called the lifetime value of a client. Now, pretty simple, right? What is the value of having a client for life, or for at least a long-term relationship, a long-term business relationship? This is obviously, like, when you look at these two numbers, if your clients can understand these numbers, it'll help them build their business. Doesn't matter what business it is. It makes no difference whatsoever. Every business has a cost of acquisition. Every business has a lifetime customer value. For big one-time purchases, well, the lifetime customer value might be that one purchase. Whereas for other purchases, like a restaurant, there might be a series of purchases over the next year, 2 years, 3 years. In order to figure out these numbers, you do have to apply some assumptions, and I'll go back to my restaurant example. So that cost of acquisition for getting the customer's name and email address into my database was $1.85. Now, when they came in that night and actually had their piece of cake for their birthday, do you think that they came in alone? Well, the answer is I never saw anybody come in alone, whoever exercised that offer. They always brought family and friends with them. And there was only one occasion which I remember where the family and friends actually sat there, didn't order anything, and just waited for the person to get their piece of cake, eat it, and then they left. Almost always, 99.99% of the time, they brought in other customers, and they referred other customers who came in and purchased. So I recovered the $1.85 cost of acquisition pretty well on the same night. The other key thing to know, by the way, is if they didn't come in, it didn't cost me $1.85, and I still got their name and email address to put into my database. So another very key point of distinction. Now, let's get back to lifetime customer value. That customer now came in, I spent the $1.85 to give him a free piece of cake. That customer, if we apply some reasonable assumptions, would come into my cafe once every couple of weeks for the next 3 years. And based on an average check of $6 and a gross profit of $2.40, that customer was worth almost $130 for a year in profit. Now, that customer was engaged to my restaurant and they became interested in my restaurant because I offered the birthday club. So if every day I was able to take just one customer, get them signed up to the birthday club, have them exercise the offer by coming in and eating a free piece of cake, yet that was then worth, $130 of profit, not revenue, profit to me in the course of a year, and that customer may stay with me. I've owned that business now for almost 11 years. Some customers have stayed with me since day one, but in terms of this program, I only started it, like I said, a couple of years ago. There's customers who now come in every week, every 2 weeks, because they were kind of introduced to the birthday club. So that program, when it comes to marketing, online marketing, was a success. Now your clients have got to understand that as well. And I'm asking you, the accounting firm partner, who want to be the business model, advisor of choice, you've got to make sure your clients know these things. Because if they don't, they'll look at it as, and some of my colleagues in the franchise cafe business looked at it the same way. They're like, why would I spend $1.85? Why would I give something away? Without really tying in the whole lifetime customer value aspect to it. So I think it's exceptionally important, and that's why I made this video, so that you can at least get a base understanding. Like calculating these numbers, yeah, there's a lot more to it, and we've only kind of scratched the surface. But understanding the concept is really what I'm going for here. Now, before we end off the video, I will also share with you a second kind of accounting model. That business, which I've owned 11 years, I've had the same accounting firm to do the review engagement and to do the corporate tax returns for all 11 years. And way back, 11 years ago, that accounting firm partner took me out to lunch. They had some advertising, which I saw in the Chamber of Commerce directory, and that cost them money. And then I basically got in touch with them. He took me out to lunch. He got to know me. He spent some time within his own office with his own team preparing a proposal or an engagement letter, that time is unpaid for, obviously. But now if you look at it, over the last 11 years, I've spent anywhere between, pretty simple engagement, by the way, anywhere between $3,000 to $4,000 per year on the accounting services that this firm provides me. So we're looking somewhere between $30,000 to $45,000 over the course of our lifetime relationship, which I've given the accounting firm. And their cost of acquisition may have been somewhere around $500 with the time that they spent taking me out to lunch, etc., and placing some ads. So it's very important that you understand the two distinct relationships here and the two metrics. If your clients are not measuring those two metrics, then I would greatly suggest you at least get them thinking about it and then ultimately help them start measuring it. And again, use some assumptions, because just getting some idea is better than having no idea. And if they think that they have the idea in their head, I can guarantee you, I think you know as well as I do, that your clients simply will not be able to run their business well if they don't understand this relationship. Most clients, they just want, if they're going to spend $1 on marketing, they want to get that $1 back immediately. Incorrect. If you do get it back, that's fantastic. But ultimately, the goal should be anytime you're doing marketing, it's you want to gain the name, the email address, information from your clients and put them into your database so that you can ultimately continue to communicate with them. So I know that there's been a lot that I've said in this video. If you have questions, then you can certainly post them at my blog, www.boostaccountingreferrals.com. Once again, www.boostaccountingreferrals.com. Once again, I would suggest that you maybe even rewatch this video. There was a lot of information in it, and I think it's ultra important for business building partners and accounting firms, how you can ultimately, be that advisor of choice. Bring this to your client's attention, please. This is ultra important in today's ultra competitive world. So that's all for now. Thanks a lot. Jay Gabrani signing out. Bye-bye.